Hello friends and welcome to this special section on market insights by the market intelligence desk of Sharekhan. Friends, we've seen the markets run up over the last about 3 to 4 months from September 2012 onwards, and the Nifty has gone up from 5600 to almost about 5900 levels, and there are few factors which have contributed to this up move. First one is that the government has come back into action and actually taken a lot of steps on the reforms front, and the fact that the government also managed to win the crucial vote in Lok Sabha and Rajya Sabha on the FDI in retail matter has lifted the sentiment, and the government seems to be in a mood to actually pass few more important bills, particularly the banking bill, the land acquisition bill, the setting up of the National Investment Board, so on and so forth. The other important factor has been the strong flow of money by the FIIs, and in December month itself, we have seen the FIIs pumping in more than 5,000 crore, and from January till December, we have seen the inflow to the tune of almost 1 lakh crore. Also friends, we have seen that certain stocks have actually run up, and investors tend to feel that they would want to get into the stocks at a certain correction, but sometimes it does not play out. So what we have done is that we have tried to compile different themes across the time frames so that investors could look at those ideas, and we have also tried to give some kind of technical levels so that the entry and exit becomes more useful. So basically friends, just to give you an overview of the ideas that we have put out, there are three categories that we are looking at. First is the large cap blue chip companies which have done very well, but there is a potential for some more upside. So in that category, we have identified stocks like Maruti Suzuki, which is currently available at about 1474, and the ICICI Bank, which is currently available at about 1118 rupees. Also friends, there are expectations that the Reserve Bank of India could do a rate cut somewhere in the month of January or February, and in anticipation of that, we have seen that the banking sector has started doing extremely well. So we have shortlisted two companies for that particular event. One is State Bank of India, which is currently available at about 2296 levels, and Union Bank of India, which is available at about 255 levels. At the same time, we have seen that the mid-cap sector as a whole has started doing extremely well, and it is important to identify good quality mid-cap stocks which investors can look at. So we have shortlisted three stocks there. One is Hindustan Zinc, where we are trying to play the stake sale trigger, as well as the fact that we have seen the commodity stocks and the cycle getting revived in China. So we could look at Hindustan Zinc, which is available at about 138 rupees. Also Cummins India, which is a play on the DG sets and the power shortage theme which is there in India, is looking very interesting. And in the media space, we have seen that the entire sector has done extremely well, and Z Entertainment is something that we feel is extremely well placed to take advantage of this digitization and the revival in the media sector. Also friends, there are certain customers who may want to look at the F&O segment to participate in certain interesting stories with a limited risk, and we have shortlisted two stocks, JP Associates, where we are suggesting a bull call spread for the month of December. Also, we have a positive bias on Unitech, where one can play a bull call spread in the month of December. Now friends, I'll quickly run you through the key arguments of some of these ideas that we have shortlisted, and my colleague Kapil will take you through the technical levels and the outlook from a technical perspective, as well as Anup will give you a detailed understanding of the bull call spread that we have initiated for these two stocks which I have mentioned, which is JP Associates and Unitech. Friends, the first stock in the large cap blue chip theme that we have identified is Maruti Suzuki, which is currently available at 1474 levels. Now, what are the triggers that we are looking at for this stock? First of all friends, we have seen that the yen has actually weakened by more than 5% over the last 1 month, and given the expectations that the market has from the new government that could assume power in Japan, as well as the Bank of Japan meeting which is likely to take place, there is a high probability that yen could weaken further. And in that kind of a context, Maruti Suzuki could be a key beneficiary, because it is actually importing close to about 5 to 6,000 crore of material from Japan, as well as the royalty payments that they do is also in yen, which is totally contributing to about 6,000 to 7,000 crore overall, both the royalty payment as well as the import of components that they are doing. So because of this yen weakness, there is going to be a decent benefit that will accrue to Maruti Suzuki. Also friends, most of their domestic issues have been resolved. The Manesar plant is operational to its full capacity. Also we have seen that the Maruti has launched new Alto 800, which has got a very good response from the market. As well as we have seen the Maruti doing a price hike of rupees 20,000 across the models. So fundamentally the company is doing extremely well, and also the yen effect will have its role to play. So we think that Maruti can be a good investment bet at current levels. Just to give you an idea about the valuations, currently Maruti is quoting at about 15 times its FY14 EPS of 93, so it looks to be reasonably priced. Also, once we have a rate cut somewhere in Jan or Feb, that could also add to the positive sentiment around the auto sector. So on that note, let me invite Kapil to take you through important technical levels and the outlook from a technical analysis perspective.
Hi friends, I am Kapil Mokashi, part of the advisory desk of Sharekhan. I am here to discuss the technical levels on the certain stocks which you have just discussed. Before beginning with the levels, I would just like to brief you the base on which we are recommending the stocks, the technical base. We have basically used the demand and supply zones, that is the support and resistance levels, for recommending you the stock ideas, as well as the two moving averages, which are the 8 moving averages and the 13 moving averages. So with this simple setups, we have recommended certain stocks on which we find that there is a good fundamental argument to buy, as well as technically they are looking sound on the charts. Basket is Maruti Suzuki. The current price is around 1474 levels. Again, we are recommending to buy this stock in between 1460 to 1470. We are keeping a stop loss of 1425, and we have a target of 1690 in mind. For Maruti, again the long-term support is placed at 1420 and long-term resistance is placed at 1695. The short-term support and resistance level for Maruti are S1 is placed at 1425, S2 is placed at 1394, R1 is placed at 1540 and R2 is placed at 1560. As we said, these levels are where Maruti could show a brief halt, but our overall bias in the Maruti is up for a target of 1695.
The second stock that we have in the large cap blue chip category is ICICI Bank, which is one of the largest private sector bank that we have, with strong presence in areas like insurance, mutual fund, private equity, and so on and so forth. Also friends, we have seen that the government is back in action, and in case the government is able to get through this banking bill, which will give the private sector banks higher voting power of 26%, and if insurance bill also gets passed, then there could be some kind of a positive rub-off effect on the private sector banks, including ICICI Bank. Also friends, we have seen that ICICI Bank has underperformed most of the other banks, particularly banks like IndusInd Bank, Yes Bank and Axis Bank. So there is a probability that it may catch up and can actually outperform the private sector banking space over the next few months. So we think that investors could look at investing in this particular bank at this point of time. And to give you a quick idea on the technical levels and the outlook, I would invite Kapil.
ICICI Bank happens to be the next stock on our radar. The current price of the stock is around 1,125. We are recommending to buy ICICI Bank around 1135 to 102, around 1135 odd levels. The stop is placed at around 1085, and we have a target of 1278 and 1241 and 1278. So we are recommending to buy ICICI Bank at 1135. Stop loss is kept at 1085 and target is 1241 and 1278. On the long term, support and resistance level is the same. The long-term support for iBank happens to be at 1080 odd levels, and resistance happens to be at 1278 levels. Short-term levels for iBank, S1 is at 1086, S2 is at 1045, and R1 1150, and R2 is at 1240.
Friends, the next category that we are trying to play is the rate cut and the fund infusion play. And for that, first stock that we have identified is State Bank of India, which is the largest PSU bank that we have in the country today. Here we are trying to play three triggers. First is that there is a very high probability of the rate cut, and because the PSU banking space as a whole has underperformed, it is likely to do much better if the rate cut happens in the month of January or February. The other point is that there is likely to be a fund infusion in the bank as the government has indicated that they are likely to pump in close to about 4,000 crore, which will improve its capital adequacy ratio. And the third one that we are looking at is that there is a distinct probability that the NPL cycle could get revived, and some of the banks have started reporting much better NPL numbers vis-a-vis the previous quarter, and we think that somewhere around the current quarter the NPL cycle could get revived. So because of the combination of these factors, State Bank of India is likely to do very well, and I would invite Kapil to take us through important technical levels and the outlook for that bank.
The third stock in the lineup is State Bank of India. Current price of the stock is 2316, so the stock is very much above its 8 and 13 day moving averages. Support 1 for SBI is at 2268 and support 2 as 2140. On the upside, resistance is placed at 2362 and the other resistance is placed at 2475. So the action plan what we are recommending in SBI is buy at the support of 2252, keep a stop loss at 2140 and have a target of 2476.
Friends, the other stock that we have identified in this category is Union Bank of India, which is currently available at about 255 rupees. And the key reason why we like Union Bank is that it has actually done very well on the NPL management front, and in the latest numbers that they have reported, the NPLs have actually reduced to about 2.06% as against about 2.20% a quarter ago. And operational performance of Union Bank of India in the recent result was much better, and the bank has reported a growth of almost about 20%, which was much higher than the industry average. So a combination of a better revival possibility of NPL, attractive valuation and a rate cut could actually provide a good upside to Union Bank, and I would invite Kapil to take us through important technical levels for this particular bank.
The fourth stock is Union Bank of India. The current market price is 253. Support 1 for the stock is 242.5 and support 2 is 220, and the resistance on the upside is 274, and above 274 we feel there is a breakout in the stock and it can take it to 290 odd levels. Action plan for Union Bank would be buy in between 240 242 levels, keep a stop loss at 220 and have a target of 290 in mind. In case of a wild swing trade, the levels which you have lined up for you are 220 on the support side and 290 on the resistance side.
Friends, we have identified 3 good quality mid-cap ideas that one can play for about 3 to 4 months time, and the first in that category is Hindustan Zinc, which is currently available at 138 rupees. Now, why do we like Hindustan Zinc? First argument is that we have seen the base metal prices started doing very well on the back of developments taking place in China, and we have seen that the aluminum prices have gone up by almost 10% and the zinc prices have also shot up by almost about 11%, and Hindustan Zinc would be the key beneficiary of this better price environment which is prevailing. Friend, the other trigger that we are looking at for Hindustan Zinc is that the government has about 29.54% stake in Hindustan Zinc, and it is looking at doing a divestment of close to about 30 to 35,000 crore. So by selling off this stake to Vedanta Group, the government could actually very easily meet its divestment target, and Vedanta Group has indicated its desire to buy this remaining stake, which will make its own stake to about 95%. So if this particular deal goes through, it could provide a short-term trigger to the Hindustan Zinc stock. Also, operationally, we feel that Hindustan Zinc is doing extremely well. It has got a cash of almost about 19,400 crore in the balance sheet, and it is earning a cash flow of more than 500 crore per year. So we think that at this particular price, it is providing a good investment opportunity, and Kapil will take you through important technical levels of the stock.
Next stock from our radar is Hindustan Zinc. The current price is around 138. We are recommending to buy this stock in between 134 to 135, keeping a stop loss of 128.40, and we have a targets of 155 and 170. In case of a wild swing in the stock, the long term support we have is at 113 and the long term resistance is at 150 odd levels. Short term levels for the stock, S1 is placed at 138, S2 at 135.5, and R1 is placed at 141.7 and R2 is placed at 145. So overall bias, we maintain long on Hindustan Zinc in between 134 to 135, stop loss 128.4 and target of 155 to 170.
Friends, the other stock that we like in the mid-cap category is Cummins India Limited, which is currently quoted at about 510 rupees. Now, the key argument for Cummins India is that we have seen that the overall demand environment for the DG gensets is on the rise given the acute power shortage that we are facing, particularly in the southern India and the northern India. And we feel that the demand for DG sets is likely to grow by about 22 to 25%. Also, friends, we have seen that Cummins India has done a price increase of about 3% with effect from January 2013. And also, they have already done another price hike in June 2012 to the tune of about 3%, which is definitely going to be incrementally positive for the margins. And we also feel that given the fact that overall global environment which was subdued, there is some kind of a stability. So the export growth, which was a bit dull for the past about 2 to 3 quarters, there is a possibility of a pickup on that front as well. So overall, we feel that Cummins India could be a good short-term investment bet at this point of time, and Kapil will take you through important technical levels for the stock.
The stock from the mid-cap basket is Cummins India. The current price for the stock is 510 odd levels. We are recommending to buy the stocks in between 485 to 495 odd levels with a stop loss of 470, and we have a target of 580 in mind. A lot of times what happens is because of certain events or certain reasons, there are adverse movements in the markets. So to catch on to that, we have given you long-term support and resistance levels. The long-term support for Cummins is around 445 and long-term resistance is at 580. Friends, the reason we have given you these long levels is that many times when certain adverse news comes, we tend to panic and we tend to sell the stocks at precisely the wrong price wherein there is long-term support is placed. Whereas at times of extreme euphoria, when the stock is hitting new highs, we tend to buy the stock at precisely the wrong price. So to prevent that from happening, we are giving you this level so that you know where are the key levels placed in the charts. Long-term support for Cummins is placed at 445 and long-term resistance is at 580. The support and resistance level for Cummins is the current price, as we have said, is 510. The short term support is 487 and support 2 is 482. The resistance 1 is placed at 518 and the resistance 2 is placed at 540. Friends, what we are saying is all these levels S1, S2 and R1, R2, these are the short term levels wherein you could see that the stock could halt for a short period of time. For example, in case of Cummins, our overall bias is on the long side. We are very much positive on the stock. In between, there could be brief pause around the levels of R1, that is 518, or R2, that is 540. So overall, our bias is up, but the R1 and R2 levels are given to give you an idea about the potential short-term levels of the stock where it could halt. So Cummins we are recommending to buy at the current price of 485 to 495. Stop loss is 470 and target is around 580.
Friends, the other stock that we like in the mid-cap category is Zee Entertainment Limited. As we all know, it's a leading broadcaster in India today with a bouquet of more than 30 channels, and with the government initiative on the digitization which has already happened in 3 metros, we believe that 38 more cities are likely to be covered in the next phase of digitization, and Zee would be a key beneficiary of that. Also, in the last 3 quarters, Zee's flagship channel has gained viewership across the top 4 entertainment channel category, which is definitely a big positive for the company. And overall, we believe that the cash flow situation is likely to improve by about 75% over the next 1 or 2 years. And currently, it is available at about 23 times current year and about 18 times next year earnings, which is quite comforting given that it's the only media company which has got a good strong balance sheet and is actually reporting decent profit. So we believe that investors could look at investing in Zee Entertainment, and Kapil will take you through important technical levels for the stock.
Zee Entertainment Enterprises happens to be our next stock. Current price is around 206. We are again recommending to buy this stock around the levels of 198 to 200 odd. Stop loss we are recommending is 192, and the long term target which we have in this stock is around 235 to 251. We are positive on this in this stock. The short term levels for this stock is S1 is placed at 204, S2 is at 193, and R1 is placed at 215. We have a overall long term bias on the stock, and we are recommending to buy at CM around the levels of 190 at 200. Stop loss is 192 and target of 235 to 251. Again, in case of a wild swing trade, the long term support for the stock is 173 and long term resistance is placed at 265. Friends, that completes the technical updates on the stock which we discussed. We advise you to strictly adhere to our levels of specifically stop losses and targets. That would give you a clear picture when you are initiating the trade.
Friends, as I said before, for the derivative markets, we have identified 2 interesting opportunities. One is Jaiprakash Associates, where we are suggesting a bull call spread, and the other one is Unitech, where again we are suggesting a bull call spread, and Anup will take you through the details of that.
Hi friends, now let's have a look at the derivatives ideas. The first idea is JP Associate and the second is Unitech. In case of JP Associate, the stock has given a breakout from 100 odd levels and can move up to 111 rupees. To minimize the risk, if the stock corrects drastically from these levels, we have suggested to do a bull call spread. In case of bull call spread, one has to buy 105 call option and sell 110 call option. This will considerably reduce the price of buying a call option of 105, as the premium outflow will be very less, and in the entire strategy the total premium outflow will be close to 6,400 rupees. If the stock goes above 106.6, that will be the break-even point for JP Associate on expiry. At the same time, the maximum profit in this strategy will be restricted to 13,600 as we are writing a higher strike call. In case of Unitech has also given a breakout from around 33 rupees level. Unitech can move up to around 40-41 rupees level. One can look to do a bull call spread in Unitech by buying 35 call option and selling 40 call option. Maximum risk in this strategy of Unitech will be 4,800 rupees and maximum profit will be 15,200 rupees in case of Unitech. 36.2 will be the break-even point for Unitech. We are suggesting to do bull call spread because we want to reduce cost. At the same time, we want to keep minimum risk involved over here. There will be no participation above 110 rupees in case of JP Associate and 40 rupees in case of Unitech. At the same time, one important thing to note is if both the stock move very close to the higher strike which are sold, then the profit will be lesser than what we have indicated in the report.